one of the giants in the tech world, Microsoft, they reported their earnings. Obviously, in the early trade, they're still seeing a boost. Is that a good sign for big tech and mega tech stocks in 2021, even considering some of that regulatory pressure and the perception by a lot of people, maybe even you, that the valuations are sky high and maybe too high?
Yeah, I think there's a general view that the valuations are high. In my view, that there's two sets within big tech. One is the ones that are likely to be regulated, and the other is the ones that are not likely to be regulated. I think Microsoft and Apple fall in the ones that are less likely to be regulated. And Microsoft in particular, I think, despite its valuation, still has a good growth future ahead. And there's two reasons for that. One is digital transformation. After COVID, every CEO in every industry knows they need to tech enable their business. And Microsoft is less of a threat in terms of cloud than, say, Amazon. And the second is next generation technology. Microsoft has invested in the big next generation mega themes like cloud, artificial intelligence, even quantum computing, which could be the next mega cycle in a decade.
So what about regulatory pressure? Are you concerned about that at all and the possible impact that could have on stock performance?
Yeah, I think I see three types of regulatory pressure. One is in data privacy, one is in antitrust, and the other is in misinformation. The companies most likely to be hit are Google and Facebook, but I would say Facebook likely to be hit the most. And the real game changer for me was that in terms of misinformation, platforms like Facebook are now news platforms, but they're not regulated like traditional news platforms like yourself, for example. And the argument that Facebook lawyers always made was that we're not a publisher, we are a content neutral platform. But of course, when the catastrophic mistake that I think Facebook's management made under pressure from the US population and also their own employees, was that they took President Trump off Facebook. And that showed an exercise of editorial control, and that makes the argument that they're no longer publishers much harder to stand. So I expect regulation in these three areas to hit Facebook and to hit it hard in 2021.
All right, so Facebook, you're seeing them as that company is the one in the most risk of regulatory pressure. As far as just their content. But what about the regulatory pressure for companies like Facebook to spin off Instagram, or maybe even for Amazon to spin off AWS? What's your take? Could that potentially be good for the market and good for consumers?
Yeah, I think let's take one at a time. So in terms of Facebook, the monopoly arises because they have control of data. So splitting Facebook up won't really solve that problem. What regulators need to do to solve that problem is to separate control of the data, which typically belongs to the consumer, from the social media platform services that Facebook provides. And there's already technology to do that, where consumers can switch on and switch off the data that Facebook can access at the switch of a button. But right now, Facebook has control of the three critical things that make it a monopoly. They have control of all customer data, and they don't share that with competitors. They have control of the cloud platform on which that data sits, and they don't share that with competitors. And they have advanced AI platforms which can interpret that data. What regulators need to do is separate the data from the software. In terms of Amazon, I think a split up makes more sense on antitrust grounds, but let's see what President Biden and the antitrust authorities decide.
So, Cyrus, we're almost out of time, but I have to ask you about this one thing. You talked about macroeconomic themes in some notes that you sent to us. One of those themes is generation hashtag. What is it, and how is it going to impact the markets in 2021?
Yeah, we see a generation hashtag as the new generation of young people, born between 1990 and 2005. That essentially are doing new things. They are more sustainable. So companies like Exxon, for example, that don't take sustainability seriously are going to be hit by that, because some of these cohorts are starting to move into the asset management space and so on. So I think they're taking sustainability seriously. They're taking things like electric vehicles seriously. So Tesla, which looks overvalued by any metric today, could be helped by this cohort. And also there's a next generation of technologies that that will help Microsoft and other big tech stay in the lead.
So one last question about that generation hashtag. Where are they buying stocks? What stocks are they buying? Are they buying big name stocks? Are they on Robinhood? How can we see their impact on the market?
Yeah, I think generation hashtag, as we define it, are typically too young to buy stocks. They don't have much disposable income yet. However, they are spenders, and they are the next generation of spenders. So, you know, they're into things like Pepsi just announced a deal with Beyond Meat, and they're into veganism and things like that. So all the things that this next generation of cohorts is looking at, that's what we look at in our generation hashtag note. And there's loads of areas, but sustainability, new forms of eating and things like that, new forms of driving. This generation doesn't want to own a car, so that's going to impact the entire car industry at a time when car valuation multiples are beyond the roof. So I think that there's a number of industries that they are going to impact in addition to car, energy, and food.
Shepard Smith here. Thanks for watching CNBC on YouTube.